The acronym BRIC was first coined in 2001 by Jim O'Neill, then chairman of Goldman Sachs Asset Management. It categorized the four major emerging economies of Brazil, Russia, India, and China. In 2010, South Africa joined, expanding the acronym to BRICS. Together, they account for over 40% of the global population and contribute significantly to global GDP. The rise of BRICS is a testament to the shifting balance of power in the 21st century. Regular summits foster cooperation on trade, investment, and security matters. This move toward greater integration has sparked debate about the group's potential to reshape the global order. As the BRICS nations continue to integrate and assert their presence, their impact will be felt for decades to come. Each BRICS member brings unique strengths and challenges to the table. Brazil, with its vast natural resources, is a major agricultural and commodity exporter. Russia, an energy powerhouse, wields significant influence in global energy markets. India, a rising technological hub, boasts a rapidly growing services sector and a large young workforce. China, the world's second-largest economy, is a manufacturing giant and a major player in global trade. South Africa, rich in minerals and resources, serves as a gateway to African markets. Despite their individual challenges, the BRICS nations share a common goal: to reform global governance institutions and create a more equitable world order. They seek greater representation in institutions like the International Monetary Fund and the World Bank. The diversity within BRICS, often cited as a potential weakness, can also be viewed as a strength. This diverse range of economies creates opportunities for collaboration and knowledge sharing. By leveraging their complementary strengths, the BRICS nations can enhance their collective power. One of the most significant implications of the BRICS rise is its potential to challenge the US dollar's dominance as the global reserve currency. The BRICS nations have taken steps to reduce their reliance on the US dollar. They established the New Development Bank, NDB, as an alternative to the World Bank and the International Monetary Fund. The NDB aims to provide funding for infrastructure and sustainable development projects in emerging economies. Furthermore, BRICS nations are increasingly conducting bilateral trade in their own currencies. This move bypasses the need for US dollar transactions and diminishes the dollar's influence in international trade. The creation of a potential BRICS currency, while still under discussion, could further erode the dollar's dominance. A shift away from the US dollar as the primary reserve currency would have far-reaching consequences. The transition, however, is unlikely to be swift or smooth. The rise of BRICS presents both opportunities and risks for investors. The rapid economic growth of these nations offers the potential for high returns. Investing in sectors like infrastructure, technology, and consumer goods in these burgeoning markets can be lucrative. Several investment avenues exist for those seeking exposure to BRICS. These include exchange-traded funds, or ETFs, that track BRICS indices, mutual funds focused on these economies, and direct investments in companies listed on BRICS stock exchanges. However, investing in emerging markets always comes with inherent risks. Political instability, regulatory uncertainty, and currency fluctuations can impact returns. A prudent approach to investing in BRICS involves thorough research, diversification, and a long-term perspective. Seeking advice from financial advisors with expertise in emerging markets can also prove beneficial. Looking ahead, the BRICS nations face both internal and external challenges in realizing their full potential. Internally, they must address issues like poverty, inequality, and corruption to ensure sustainable growth. Externally, the BRICS nations must navigate a complex geopolitical landscape marked by great power rivalry and increasing protectionism. Finding common ground on issues like climate change, global trade, and security will be crucial for their collective influence. Despite the challenges, the BRICS nations are well positioned to play an increasingly prominent role in shaping the 21st century global order. Their collective economic weight and shared desire for a more equitable world give them considerable leverage. The decision to invest in BRICS is ultimately a personal one, dependent on individual risk tolerance, investment goals, and time horizon. The potential for high returns exists, but so do the risks inherent in investing in emerging markets. For investors seeking diversification and exposure to high-growth economies, BRICS offers compelling opportunities. However, A cautious and informed approach is paramount. Thorough research, careful selection of investment vehicles, and a long-term outlook are essential. Staying abreast of global economic conditions, geopolitical developments, and internal factors within each BRICS nation is crucial. Ultimately, investing in BRICS requires careful consideration and a willingness to accept both the potential rewards and inherent risks.